Good afternoon or good morning, wherever you are in the world, and a very, very warm welcome to everyone to this US Payments Next Chapter webinar hosted by Vixio Regulatory Intelligence. My name is Jack Halliday, and I'll be running the webinar. Now, before I hand over to today's moderator, Jimmy Franklin, I would like to remind all attendees to please engage as much as possible by asking questions for our panel. Jimmy will provide more details on how to do this later on. Should you have any audio or visual issues or questions during the broadcast, please write a message in the chat box and I will look to get that sorted for you. I'd also like to remind you that today's session is being recorded and a full version of the recording will be sent out after the webinar. Now, without further ado, I would like to hand over to today's webinar moderator and senior payments journalist for Vixio, Jimmy Franklin. Jimmy, over to you.
I am Jimmy, and it is a pleasure to be here with you all today. I apologise for that brief technical issue there. So today we're looking at payments issues in the US and the next chapter for that. It's going to be a very exciting webinar, certainly some very interesting panelists with me here today to talk about it. So in terms of where to start, I think it would be fantastic to go through what we do here at Vixio. So at Vixio, we are a regulatory intelligent technology platform, and we look at issues including PSD3 and other issues such as in the US, FedNow, and also the launch of open banking, which we'll be discussing today. I think that with due course, it would be fantastic if we can have a look at who we're going to be talking with. So to do my introduction, I am Jimmy Franklin and I work as a senior journalist with Vixio. And yeah, I'll be moderating today's panel. And then if I can turn to Bridget, it would be fantastic if we can hear a bit about what you do.
Thanks, Jimmy, and hi, everyone. My name is Bridget, and I do policy for Americas at Wise, formerly known as TransferWise. We are a global payments company, and our mission is to make cross-border payments instant, convenient, transparent, and eventually free. And so we were founded 12 years ago. We now have 16 million customers, and we're moving about $10 billion in cross-border payments each month. And last year, our customers saved $1.5 billion in fees compared to using a traditional provider. So really glad to be here. And as a bit of background about me, I was working in Brussels for 5+ years, and now I'm based in the US. So glad to see the topic of this panel. Thanks.
Fantastic. Manish, if we can hear a bit about what you do.
Thanks, Jimmy. You can hear me okay, right?
Yeah,
okay,
absolutely.
So I work for a company called Shazam. It's not the music company, just to be clear. It isn't the Marvel character either, just to be clear. It is a payment network that is in the US. It operates in about 42 of the 50 states in the US. Our client vertical is primarily the community bank, the small to mid-size banks and credit unions. I do have an extensive background in the UK in payments. Originally started in payments and have stayed in payments ever since for over 30 years. I lead the product and marketing teams here at Shazam. Have been in the US for about 20 years and certainly have had a taste of regulation in both the European and now the US markets as well. So I'm looking forward to the engaging discussion here. And I've been at Shazam for about 20 years now. Primarily working also in the industry as well, not just internally for our customers, but also externally with the US Payments Forum and a Secure Remote Payment Council, where I head up their efforts. So looking forward to the discussion.
Thanks so much, Manish. And Andrew, last but not least.
Sure, thanks, Jimmy. So my name is Andrew Gomez. I'm a director at Lippis Advisors. We are a Berlin-based payments consultancy firm. I focus on Western Europe and North America. Originally being from the US, it's obviously something dear to my heart. In terms of what I normally do, it's looking at things like payment adoption. So let's say the adoption of FedNow or RTP, or say SCT Inst in Europe. Regulatory issues around payment adoption, competitive factors. So looking at things like, say, open banking and how that will affect card adoption or say instant payments, and of course, go-to-market strategies and product benchmarking. So we work with companies all over the payments value chain, from ACH operators, regulators, tech providers, fintechs, and of course, banks.
Fantastic. Thanks so much, guys. So yeah, as I was saying, payments has been a pretty busy area, and I think that we have all had to adapt to that in recent years. Obviously, in the EU, we've had God knows what going on in terms of regulatory announcements, the PSD2, followed by the instant payments regulation, and obviously everything else that's coming with that as well that affects payments, such as the anti-money laundering directives. In the US as well, though, as you can see with our Horizon scanning product here, which I sourced this data from, there is a lot happening as well, and there's been lots of announcements. We've had FedNow, and we've also had open banking, which we'll be discussing today. So in terms of the first thing that I wanted to kick off with for this webinar, it would be great to know what have been the biggest trends that you guys have noticed in the US for payments. Bridget, let's start with you.
Sure, thanks, Jimmy. I think two things that come to mind for me in terms of trends that we've seen. Biggest thing, first of all, is speed. So when it comes to many other parts of our lives, everyone's used to something happening instantly, instant gratification, sending an email, you receive it immediately. And I think we're going to see that, and we already are seeing that in the financial services space. So we see at Wise that customer satisfaction actually doubles when our payments are instant. It removes customer worry. There are just a plethora of benefits, but I think this is one of the key trends, and I know we're going to talk about that a little bit more with the context of FedNow. I think another aspect and kind of key trend is also convenience. So, consumers expect their financial products and services to work in an interconnected way. They don't know the back end. They don't want to know the back end. They just want it to work. And so they want the experience to be seamless. And so that's also where we've seen sort of bank fintech partnerships, and Wise, for example, partners with credit unions who may not have the resource to build sort of a cross-border payments product, but then their customers are able to benefit from our technology as well. And so I think those are two trends that I've seen, and I'm sure we'll continue to see.
Absolutely. And Andrew, it'd be great to hear from you on this matter.
Yeah, I would agree with everything actually Bridget just said. I would also add, not just in terms of FedNow going live, but the increased usage of the RTP network, so the other instant payment system in the US, that's increasing as well. And I will say that same-day ACH numbers are increasing. So this is, the types of payments that you initiate in the morning, and by the afternoon or early evening, they've posted to the account. So not quite instant, not term a matter of seconds, but a couple of hours or maybe even a little bit less than that. I'd also say that things like open banking are starting to take off in the US. Obviously, the regulatory environment in the US is very different than in other markets where you're seeing, let's say, more robust open banking adoption and use case creation. But I think that the US is showing that regulation isn't the only way to go about doing things. I think that we're going to see that continue to increase over time.
Nice. I suppose at the US Payments Forum, you've been, if you've been with Shazam for 20 years, and I'm sure you've been with the US Payments Forum for some time, it'd be great to know what kind of trends are you seeing, what kind of things are coming up at the moment with your members.
Yeah, so as a chair and ambassador of the US Payments Forum, I joined that organization when it was really EMV, the migration that kicked off those ventures that then morphed into the US Payments Forum. But just back in 2000, EMV was the trend, and everything was going chip. It was interesting because when I left the UK in 2000, I'd gotten away from EMV, which was in its infancy for about 3-4 years, and unfortunately it caught back up with me in the US. And that was one of the hardest implementations ever. But from a trend perspective, everything Bridget and Andrew said I would concur with. I would just simply add that, if we look at what the users of payments expect, I think some of these have already been expressed. Convenience, customer experience, I think is key. Personalization, not having to think about the payment, but the payment integrating to your lifestyle. Greater awareness of fraud, because like it or not, that is a constant that we all live with. It's staying 2 steps ahead, but generally we're 1 step behind of the fraudsters, but nevertheless doing everything we can to catch that. The idea of instant everything and just overall, I would say, simplicity. So if you take those tenets and map them to payment trends, I think we've talked about ACH, a huge displacement opportunity. But ACH itself is competing, like Andrew said, with same-day ACH. You've got the digital experience, everything is going digital. You've got the edge solutions like the fintech applications that are delivering superior experiences. But then you also have the backbone of payment systems that are very much needed to support those experiences. Contactless payments obviously has been pushed quite a bit by a number of the global brands, and no surprise there, contactless everywhere is. In fact, I believe the UK and Europe has been far ahead of contactless than the US has. So while the US, and having been here 20 years, I can be somewhat objective, it has prided itself in being ahead in technology. I would argue that with payments, we're still trying to probably keep up with the European ventures. And some of that is because we are, as much as we might think we are highly regulated in the US, folks that think that should try Europe and probably realize that there's a lot more you have to bear there. And I think the greater competition, and I just speak from my own experience, you have 10,000 financial institutions in this country. You have a number of different debit networks. You have a number of credit networks, credit card networks, and now you have 2 instant payment solutions called RTP and FedNow. Competition is rife. When competition occurs, you get proprietary solutions emerging. Everyone clamors for standardization, but everyone's afraid to standardize everything because then they feel it might stifle innovation. So I think these trends are struggling from an adoption perspective. There's no one solution, and we've become an additive society in payments. And I simply say that because cash hasn't gone away, checks haven't gone away, and you'll have ACH, debit card, instant payment, you name it, the entire spectrum. I don't think any of those are going away anytime soon. But all I can add is from a trends perspective, it's hard not to embrace all of those capabilities, because the moment you do, you will lose, one of your customers will lose. So as a provider of services, it's important that you stay on top of all these emerging trends and decide when to make those investments to participate. So.
Yeah, absolutely. I think it's interesting that you mention as well the difference between Europe and the US when it comes to payments. Certainly, I've heard that before about contactless being a bit behind in the US, and there's not perhaps that kind of heavy regulation that we're used to from the EU, and also in the UK as well. Manish, I was wondering whether you could talk us a bit through what the licensing process is in the US. I don't know if you have much experience of that, because I think in the UK and in other EU member states, that's often something that can be a real headache for companies that are looking to move into the payments world, let's say.
In terms of regulation itself in the US? Yeah, I think so. I would offer that state to state isn't necessarily the biggest concern, but nationwide, obviously, we have regs that have come in. It's hard to say that regs can ever be enforced, but they can be strongly documented and suggested, and action taken if you don't comply. But the timeline by which you have to comply, even though dates are put down, it's interesting how long it can take certain providers to actually come into compliance. But certainly from my own experience, if we look at ACH is a nationwide participation by every financial institution that's regulated. But is ACH mandated? Folks might certainly think it's mandated, but it grew over decades. Here comes FedNow. Can FedNow ever be mandated, or will there be an encouragement to adopt because it is the central solution that's technically non-private? I would offer the same for debit cards. Is it on the debit card side, there's no regulation that says you have to have a debit card. But if you do, there is a regulation that you must have 2 or more networks, debit networks on that card, because that increases competition and that favors all entities in the ecosystem. So merchants have routing choice, and certainly the US Payments Forum has an entire working committee on debit routing itself. And that's primarily been fueled by regulation on the Durbin side. Senator Richard Durbin, who put out, an amendment many years ago, back in 2010, which now had a version 2 refreshment last year. So I wouldn't say we're divorced of any regulation, but the way in which regulation operates in this country certainly very different to what I believe is more mandatory in other countries.
Yeah, absolutely. And with FedNow, obviously it launched over the summer. It feels like quite a seismic change for the US. People that I was speaking with in Europe over the summer seem very optimistic about it, and people I think are aware of the risks, but also feel that it provides a lot of opportunities, let's say, for innovation in the US. And I wonder if I can turn to you, Bridget, how do you think the rollout of FedNow has gone so far in the US?
So first of all, yeah, I think there's been a lot of excitement surrounding the announcement, and that's to be expected. And don't want to be too negative, but I mean, it's only been 3 months, right? So of course, everyone's taking a little bit of time to sort of take stock and see how this is coming together. I believe it was beginning of October that the Fed announced that there are 100 organizations now who are signed up and using FedNow. But I think what we'll see, and this is sort of a prediction, but is similar to what has happened in Europe, which is, we'll see a few big players utilizing the service, but we'll also see a little bit of a lag, of course, with smaller players as well, who just, it takes time and resource to build these kinds of systems. But as a payments company, of course, as Wise, we cannot connect directly to FedNow. So it's only open to depository institutions, to banks, unlike in Europe or the UK, where they have opened up broader access to the payment system. And so that will be a hindrance, as long as that stands, to really making FedNow ubiquitous, because as Wise, we have to rely on our bank partner to adopt FedNow, but also make it commercialized for fintechs like us. And so I think what I'd love to see is obviously, risk-based access opened up to payments companies, non-banks, fintechs, in order to make sure that all American consumers and businesses can benefit from FedNow. In the EU, they had targets, and this is sort of I would almost say controversial topic in the US. We don't like to mandate anything. We don't like to sort of impose, but I will say what Europe did is they had a number, like percentage targets, that they wanted a number of member states that adopted SEPA Instant, so the Single European Payments Area instant payment system, but also a number of accounts that were, accessible under it. And so they were working toward those targets. And so we still see a variation, I believe, in Europe. You'll have some countries that are at 100% instant, other countries who are very low. And so there's still a big, I think, fragmentation variation. But I would say today, it is the norm to have an instant payment in Europe versus in the US. I don't think because FedNow launched 3 months ago that all American consumers are seeing instant payments. But we're excited about it. I think what we need to think about going forward is incentivizing across industry for everyone to benefit from this new technology. And I think what you'll see too is once consumers get a taste of FedNow and that kind of ubiquity, they'll expect that from everyone. And from a competition point of view, I think that'll be a good thing. But I also think we do need to focus on that access bit. In the US, it won't be turned on today. We know that, but I think it's something that we need to think about also for consumers that might not be using a bank or have cross-border payment needs, sending remittances home. How can they benefit from FedNow?
Yeah, absolutely. And I mean, not to get ahead of ourselves, but that fintech access, that has been such a big topic in Europe in recent months as well with the PSD3 revisions. Have you spoken much with regulators about that? Because I think that's, or with others about that, because I think that would be interesting to explore a little, whether you're optimistic, let's say, about that fintech access coming anytime soon.
We have. I think it's an ongoing conversation. I think right now, FedNow, the focus was really just to get this out the door and to focus on uptake. And then I think this conversation is happening and will continue to happen going forward. But I think today it's really just focusing on getting that uptake.
Absolutely, absolutely. And Manish, what are your members at the Payments Forum making of FedNow so far?
There's certainly interest, but just coming out of the pilot stages and being in general availability, I think everyone is treading carefully and cautiously because the business case to just adopt maybe the entry level of receive only has merits for sure, but a lot of the volume will be driven by big businesses initiating traffic on account-based for account-based transactions. Make no mistake, today you have this thing called ACH across the country, and that has served its purpose. But now, as we'd all said earlier, instant gratification, instant everything is the order of play. Debit card push credits has been in the marketplace for quite some time. Then along comes account-based, that's instant. Senders have reservations about pre-funding liquidity, paying it forward before that money is actually spent. That money, millions of dollars per institution that sponsors initiators of these payments, have to house that somewhere. Then there's always the conversation about, is that the best place to park my money? Well, but I can't afford not to offer instant payments. Can the applications like payroll companies or the P2P organizations or anyone who wants to do mass payments that would formerly be ACH and want to go instant, can they provide a value proposition that says it's worth going to account based and you can get your money instantly? Can they get them to enroll their DDAs versus their debit card? So a lot of things to consider. And at the end game of FedNow, I would just say is the consumer doesn't care whether it's FedNow or RTP or a debit card. They just want the payment done. So a lot of the conversations around adoption is really between payment entities that are trying to get along, frankly, that are just trying to interoperate and create ubiquity. What I do know is this is yet another additive technology, and I know certainly there's no mandate to do something like a FedNow or RTP, but there can be value. Certainly the banks and credit unions, some of them are scratching their heads about, interchange. I have interchange on a card. Do I have it on an account? So there are lots of things to consider. So while the launch has gone reasonably well, right now it's a technology play. Let's just all get on the playing field in some shape or form. But economics will come into play at some point. We shall see.
Yeah, absolutely. I think it's interesting, those similar kind of issues that have been coming up with Europe with things like interchange and the move to instant payments. It's interesting to hear that's also a factor in the US. I was going to say as well, just before we go any further, if anyone has any questions for our panelists, I will leave 5 minutes at the end that they can hopefully answer some of those. I think with the tech issues at the start there, I forgot to mention that. So as well as FedNow, we also have the fact of open banking. Open banking is another topic that I think is just starting to heat up in the US by the looks of it. There is going to be some work being done by the CFPB, which I believe is happening pretty soon. It's been a massive issue in Europe, and again, it seems to have been a little bit different, the approach in the US. So where I would like to go with this, and when speaking to our panelists, it would be great to know Do you think that open banking has been a success story so far for the US? Because obviously in the US it has been, a different approach, let's say, to what it's been in Europe. Bridget, as someone who used to live in Brussels, I feel like you've probably got experience of both sides of the Atlantic here. So yeah, do you think that open banking has been a success so far?
Oh, that's a loaded question, also because we're looking ahead toward the rulemaking. But I think, yeah, like you said, obviously Europe took a regulate first approach with the Payment Services Directive and sort of market second, whereas right now in the US, what we've seen is that open banking exists, but only through sort of, commercial deals or private partnerships, let's say. And so it's been interesting to see how those two regions have sort of developed differently. I'm not sure one is better than the other, but I would just say that now that, of course, informs the rulemaking that the CFPB will do, because they're not, approaching this without open banking already existing. They're approaching it with some kind of business that's already developed, but then now trying to come in and ensure, consumers have, rights to their data, et cetera. And so I think we've seen a few players emerge in the US versus in Europe. It's been a little bit more fragmented. And Europe has struggled while they have had a regulation first approach. Obviously, across the EU 27 member states, there's been differing standards, different qualities of APIs that we've seen. So nothing is sort of perfect. I don't know if there's a right answer, but we can certainly learn from what they've done, I think, now when we're looking ahead to open banking in the US.
Fantastic. And do you know when the rules are due to come out? Because I was hearing that it's going to be quite soon, that the US is supposed to.
I heard it could be as soon as this week or next week, but we don't know.
It's a shame they haven't been released yet for this webinar. Yeah, Andrew, I wonder what your views are on this. Do you think that open banking is a success story currently for the US, or do you think something needs to change?
Yeah, I guess it really comes down to what your definition of success is. In Europe, some markets, I think open banking has clearly been a success. In other markets within Europe, as Bridget said, we've had issues around the quality of APIs, the lack of a clear, defined standard, and that's led to market fragmentation and, let's say, less optimal adoption rates. In the US, where you have a market-led approach, it would not be, I think, prudent to expect, this massive adoption with, the market creating a standard in 6 months, and then all of a sudden a year later, everything's adopted. I mean, that's just not feasible. So I think you always have to temper your expectations based on let's say, the way that the markets are figuring things out. That said, while that might sound a bit negative, I think open banking is clearly here to stay. There are a lot of bilateral relationships being developed in the United States, and I don't expect that to go away anytime soon. I don't think that we'll ever get to where we could get without some type of regulation and some set of standard setting. I think if you look at other markets beyond Europe, look at Brazil, look at Thailand, look at India, you see massive adoption of open banking type principles, and it's led to really, really great benefits. And so I think this knee-jerk reaction of regulation bad, let's stop it as much as possible, is actually very short-sighted. Now, there are obvious reasons why certain players are doing the way the things they're doing. I don't mean to say that, but I think it benefits everyone to have some sort of regulation, in the same way that we have rules that dictate what cars may drive on the road, what speed they can go, what type of emissions they have, what type of safety standards. Sometimes regulation actually can foster innovation. So I think we have to get away from this knee-jerk reaction. I also think that open banking is not the kind of concept that we can judge after 2 or 3 years. The PSD2 came out a long time ago. It's been, I think, 6-7 years since it was first published. I want to say in 2015, 2016, and slowly adopted since 2018. And Europe is not happy with it. That's why we have the PSD3 coming out. And so, this is a process. It's not a little box that we can check and say, okay, we did it, now we can move on. It's an ongoing issue.
Jimmy, if I can just add to that, I think exactly what you said, Andrew. I would say one of the biggest lessons learned for us as one of the first to sort of adopt open banking in the UK was that unless financial institutions are required and incentivized to open up consumer data, many will not. And so that's why when we speak about the need for regulation in this space, it's actually pro-consumer. It's giving financial data rights to consumers. And so I think that is a key one. I love that you have the quote on the slide here, Jimmy, but I think it's striking that balance between, okay, we don't want to micromanage and overprescribe, which I think in the EU regs, there was a little bit of that. On the other side, if you have no sort of governance, guidance for standards, like that's going to be very problematic as well. So I think it's really finding that balance in the US.
Yeah, absolutely. And just to follow up on that, could you see the US bringing out something like PSD2? I mean, I remember in 2019 interviewing a payments company that were operating in the EU and in the US, and they were saying they really wanted there to be kind of a US version of those standards. I guess, the regulatory environment seems very different in the US, so I don't know, could you see something like that being introduced, or should we expect something a bit more piecemeal?
I mean, I wouldn't expect something like that. Obviously, the Section 1033 is narrowly focused on, consumer data rights. At the same time, I do think with the emergence of payment companies getting larger, also there's been a lot of like stablecoin legislation in the U.S. that has brought policymakers to think a little bit more about the federal framework for payment companies. I don't know if that will, amount to anything, but just to say that I do think that is top of mind. I don't think you would necessarily see something in a big package like you would in the EU, but that's just my feeling.
No, absolutely. I think it will be one to watch, and maybe quite soon if they decide to bring out the rules this week or next week. Fingers crossed. So yeah, another issue that we wanted to talk about on this webinar would be the Durbin Amendment and the Credit Card Competition Act. I think that these are quite big topics that are coming up at the moment in terms of payments innovation and competition in the US. Manish, I'm sure that your members at the US Payments Forum are finding their way through how they respond to this. So it'd be fantastic to hear your views on the Durbin Act.
Well, certainly there's probably some misnomers about what the act actually is, because you've got the Credit Card Competition Act, which isn't officially in place, but it's received a lot of attention, and then you've got the Durbin Amendment that is in effect, that has been in effect for about 12 years, since 2011 or 10, I can't remember which, that has had a version 2.0, if you can call it that, back at the end of 2022. And the latter talks about the debit card world, how every card issued that's a prepaid or a debit card has to have 2 or more unaffiliated networks on the card itself. So you can have 3, 4, however many, go to town with that. And it's all about, the question is, what value does that bring to the issuers, the card issuers? What value does it bring to the merchants and to the networks themselves? What does that mean to the ecosystem from an issuer processor and an acquire processor perspective? But make no mistake, it's both card present and card not present transactions. And more recently, the regulation emphasized the fact that issuing financial institutions needed to ensure that they had acceptance, that their card profile itself, their card in its entirety, was able to receive card present and card not present transactions from those 2 or more unaffiliated networks, not just kind of brand stamping and I'm saying that I'm done, but actually be able to say I also accept transactions. Now, there's no requirement to enforce that they get transactions from both networks, because that's kind of out of their control. It's down to retailers, merchants actually exercising choice when they get a card. Swipe, tap, I'm saying swipe, yes, it still exists here, but swipe, tap, dip, could be from a mobile app and it's a card not present, or it's from the wallets like the Pays. The ability for the merchant to be able to choose from 2 or more unaffiliated networks ultimately it's down to economics for the merchants. There may be other things like uptime, SLAs, and which networks are the most reliable and so on. But acceptance is a big deal. People talk about fraud a lot, which one gives me the best fraud protection? But I personally believe fraud protection is a non-negotiable. And ensuring that fraud protection is, in my personal opinion, is a right, not a privilege, because as each of us discover fraud in the ecosystem, it's like a virus. And so if you choose to only fix it for yourself and not share that, if everybody did that, other people's fraud discoveries will proliferate into the ecosystem. So I sort of think fraud is one of these, yes, you can offer competitive levels of innovation over fraud. Different networks, different processors and issuers can offer that. But in the end, we're all fighting the same enemy at the end of the day. So that's, for me at least, that's one of those non-negotiables that we just need to all continue to evolve as an industry so that we can innovate on top of it. So back to the Durbin Amendment, it fosters competition for merchants. It fosters competition from a debit network perspective, that multiple debit networks can offer their services. And from an issuer perspective, it's about optimal interchange income. Folks always say, well, of course, the biggest brands will give you the biggest net revenue, biggest revenue. If you look at gross revenue and blind yourself to expenses, absolutely, you're going to get a picture that you asked for. But if you look at net interchange income, there may be optimal outcomes depending on different transaction types. So that's what the Durbin Amendment's really trying to open up, and it's trying to somewhat make payments accessible to everyone. And as a US Payments Forum ambassador, we actively talk about debit routing in multiple different ways. We have a very engaged group, a cross-stakeholder group that really focuses on talking about these issues. We look at how it's playing out in the market and try to come up with white papers and guidance papers to suggest ways that you can operationally and technically address these solutions. And on the Credit Card Competition Act, whole different world. I know enough to be dangerous, but I won't comment a whole lot because it's not official. A lot of things have been talked about this, but if we look at how many credit card networks are out there, there's primarily the global brands. And so this is about potentially trying to level the playing field in a similar manner, but it needs different considerations, I believe. Credit card is, in layman's term, a credit card is using other people's money. A debit card is using your money. Two different outcomes, in my personal opinion. So when you put it like that, yes, you might have similar chargeback rights on transactions and the bank's off protection and so on, but it's a different outcome when the money's gone from your account and you're clawing it back versus the money's not gone because you don't pay till the end of the month and you're trying to dispute a charge. So things to think about, and rewards also become a conversation. Credit card rewards are very different from debit card rewards. How these competition acts will impact those are always a debate, but I can certainly tell you that it's been a competition opener on the debit card space. I can probably not comment as much on the credit card side.
Absolutely. And do you think that is anything that Bridget or Andrew want to come in on that at all in terms of the Durbin Act and the opening up of competition for debit cards and also credit cards of the Credit Card Competition Act? Do you think that these are quite hot topics at the moment in the US, and are we going to see kind of more legislation like this coming out from the US as well?
So I have a lot of thoughts on the Durbin Act. I guess my big issue here is that no one wants to have a card that's not accepted anywhere. I mean, let me give you a perfect example from my private life. In Germany, we have a domestic card scheme that only works in Germany. And so whenever I leave, which as a consultant I'm leaving rather frequently, I have to make sure that I have a card with me that works outside of Germany. So it means that I don't even carry my German domestic card anymore because it's not worth it. I have to constantly think, do I have the right card with me? And I would make that same argument with adding an additional card scheme, that if you're really going to try to increase competition, setting up that network effect is very, very difficult. And just forcing a second card to be present isn't necessarily enough to get that network effect going. There's other issues around interchange. I mean, if we, to be very quick about it, if you just look at the interchange fees in the US and compare it to the global standards, you'll notice that interchange for cards in the US is far higher than anywhere else. And in the end, it has a socioeconomic problem, because what ends up happening is it costs, the merchants have to raise the costs on all goods because they're paying high interchange fees. And that also then means that it's less wealthy people who aren't benefiting from the rewards points that end up having to pay higher fees and not get any of the rewards from it. So, I would argue that lowering it, or increasing the regulation on interchange fees could also have an effect and make other types of, say, account-based payments just as competitive. Although I think, Manish brought up some really good points about fraud. I mean, that's another issue that drives me kind of nuts when I look at the protections in place, or I should say not in place, in the US when it comes to account-based payments. But yeah, I'll leave it at that.
On the interchange front, do you think there's an appetite to look at interchange in the US at the moment, Andrew? Is that something, because I mean, it's such a hot topic in Europe. I think I saw recently that Italy are doing some work on it, Belgium as well, going into the election year is looking at this. We've got the market review as well, I think being released by the Commission pretty soon. So yeah, is there much appetite in the US from what you've seen for interchange fees to be looked at the moment?
I think the question is, a better version of that question would be, is the right type of appetite there from the right players? And the reason for that is, yeah, merchants are screaming for more regulation of interchange fees. The question is, are they going to be able to push it through? And I'm skeptical. I mean, at the moment in the US, we don't even have a Speaker of the House. And it's getting any meaningful legislation done in the United States is worse than going to the dentist. Sorry to all the dentists out there. So is there appetite? Yes. Is it coming from the right players? That's debatable. Given the political climate, is it likely? I would say probably not, unfortunately.
Andrew, some of us like to go to the dentist. I don't know what you're talking about.
Yeah,
I want to know who you've been.
Maybe just to add one thing on that, I can't speak in depth to, you guys are better experts than me on this, but I would just say interesting to kind of pull the thread with open banking with this dimension as well, because I think just like more generally competition in payment methods, right? And how can we increase that? I mean, it's better for everyone, more competition, lower costs, better for consumers. So could we see, we know right now in the CFPB's rulemaking in open banking, they're not looking at payment initiation, they're looking only at account information. But in the future world where we would be able to pay with open banking more broadly, how does that impact then this conversation? I think that's interesting to think about.
Nice, absolutely. And in terms of fraud protection, Smash, I don't know if you'd be able to share a bit of insight on what's going on the regulatory front and also among payments companies when it comes to tackling fraud, because fraud is such a hot topic at the moment in the UK at least, and I think as well in some other European countries. So much is happening from a regulatory point of view, and we've had a lot of politicians taking notice as well. So yeah, it'd be interesting to know, is there much collaboration, much conversation going on at the moment about tackling fraud in the US?
I don't think I've been to a single conference or a discussion where fraud hasn't come up. It's always there. And so the question is, how do we stay on top of it? Are we aware? The dichotomy is there's two parts to this, which is no individual organization wants to talk about their specific fraud numbers. But at the same time, let's collaborate on fraud solutions, right? So it's kind of an interesting outcome. But suffice to say, on the debit card side, for example, you've got major issuer processes that provide very industry strength fraud solutions, real-time fraud protection. Certainly my organization is no exception. We pride ourselves in that. I think the acceptance at the point of sale, acceptance at an ATM or a mobile channel, whatever your channel is, the industry's thought of a number of different solutions, including tokenizing, tokenizing that channel, which means I'm specifically provisioning the physical card or physical instrument of payment to a token so that it cannot be replayed or reused on a different channel. Certainly added levels of protection. These are great strategies that the industry has come a long way. We still remain pretty challenged. Going back to the Durbin Act, it talks a lot about routing choice, so cards are accepted, 2 or more networks, but it also talks about issuer acceptance. What it doesn't necessarily stipulate or enforce in any way is that the data that is needed to ensure fraud protection, kind of the data itself that's captured, that it also be equally transmitted to all routing choices. That creates a challenge, and what we don't see as a big picture is where we can almost hurt ourselves as an industry, because if we want the ecosystem to thrive, we've all got to get on top of fraud. And so having access to the data, I'm talking about the indigenous data, the raw data, and then let everybody provide the sophisticated levels of fraud. That's up to the competition to decide. But to restrict access to data becomes quite a challenge. So then you end up creating proprietary solutions to capture other forms of data, because you can obviously throw the kitchen sink at the problem and say, I want 10 data attributes and I'll decide whether this transaction is a suspect fraud or not. I also think the other piece is, on the instant payment side, the hunger as the instant payment account base grows will be to figure out ways to know your sender and know your receiver. I think there's a lot coming our way from that perspective. So I think we cannot take the foot off the gas pedal, the petrol pedal. I keep saying gas now because I've been in the US for 20 years.
Fear not. And on that front as well, with instant payments, is there much are there many confirmation of payee initiatives taking place in the US at the moment? Do you have things like that can help out with fraud? Because I think that is interesting. If fraud is if FedNow is to take off, are the banks prepared for perhaps a bit of a change in how fraud is happening?
Well, I was going to mention that, Jimmy, if I can. I mean, that's one of the things that we've talked about as part of FedNow. It's actually an opportunity to introduce these types of measures where we can learn from other jurisdictions. So for some of us who might not know what confirmation of payee is, it's essentially sort of a matching of name or account details to make sure that the person that you think you're sending money to is indeed who they say they are. And so including measures like that within a new system like FedNow, but also, of course, things like multi-factor authentication. I think, to be honest, the EU, at least through the regulatory approach, has been a little bit ahead on that front. So combining those and stopping fraud before it happens rather than looking back, I think is key.
Yeah, absolutely. And we are, as I've just been reminded, coming up to our final 10 minutes. So I will just quickly put some Q&A questions that have come up from our audience to you guys. I hope that is all okay. Obviously, do not be afraid to turn them down if they're not things that you're able to speak to. But it'd be fantastic to know, one of them that's come through, do you think that payments innovation is high on the agenda at the moment for politicians and regulators in the US? I suppose, talking from my own experience, one thing I've seen in the EU at least is that we've had the retail payment strategy, the digital finance strategy. Whether they've been a success is debatable, but I wonder is payments innovation as high on the agenda for regulators and politicians at the moment? Any takers?
I'll take a stab at that. Okay, I think very much so. I think it's interesting. In the last 5 years, I've definitely sensed an uptick in the regulators and the Fed getting more involved in innovation. They're probably in the thick of getting more aware, understanding the new technologies that are in place before pulling the trigger on any kind of regulation. So debit card's been around for a long time. So Durbin is kind of more legacy, classic. But you look at all the new forms of payment, and I think I would even venture so as far as to say central bank digital currency or even crypto. They're in that getting familiar stage awareness to figure out, is this going to turn into the Wild West or does it need regulation? Is adoption going to be assisted by regulation or is it going to be hampered without regulation? I don't know, but I certainly sense there's a lot of keen interest in all the new ways to pay and all the new ways to bank.
Fantastic, interesting. Any takes from Andrew and Bridget about?
I mean, I think that yes, there's an interest in innovation. I also think that's colored by a worry about financial stability and risk, obviously, as we all know. So trying to better understand new innovation, also because they're looking to mitigate risks and understand better how they can do that going forward and sort of future-proof, I would say. I think that's in a lot of the conversations we've had with regulators in particular. I think that's top of mind, which as it should be, right? But I think hopefully by learning more about technology and how to supervise fintech and these new innovations will be key going forward.
Fantastic, brilliant. And one final question that's come through: is there as much enthusiasm for things like stable coins and innovations like that in the US at the moment? I think one thing, and also central bank digital currencies, because one thing that we've seen in Europe with the markets in crypto assets regulation, which is coming in at the moment for the EU, and also all the talk about a digital pound and digital euro. There's lots of discussions going on at central bank level. I wonder, is that same kind of interest taking place at the moment in the US?
Yeah, I think I'll take this. I mean, I think it's an open secret in Europe that the digital euro is coming. The question is when and in what form. But I think everyone that goes to the payment conferences in Europe has been talking about this now for the last year, and we all expect this to come out pretty soon. I think you actually see the exact opposite in the US. I mean, many senators came out and basically were forbidding the Fed from creating a CBDC. I spoke to a lot of folks at the Boston Fed that were involved in Project Hamilton, and so I think there was some interest. There was obviously a lot of really great research done into the topic. I think the political situation in the United States, and frankly, the amount of misinformation on what a CBDC is and what it means and how it could be used, means that that's not going to happen anytime soon. I think we'd have to see a dramatic change in politics for the Fed to be allowed to create a CBDC.
Absolutely, I think I've seen something pretty similar myself take place when I've looked at the US.
I was just going to add, I think interest in those technologies fluctuates as in line with the price of crypto. How's that? And so it's a hot topic when things are going really well and nobody can explain why, and it's not so hot, and stay away from that, and we need to regulate this. So I think sentiments are so mixed, and I think Andrew made the exact point that I agree with, which is there is a lot of misunderstanding on the difference between central digital currency, stable coin and crypto, and even sometimes associated with faster payments. I think we have to look at these things in isolation and really understand the impact it can have on the financial environment.
Absolutely. Well, that is about time for us today. I'm just going to hand over to my marketing colleague, Jack, who will come and do a final talk about what we're going to be doing at Money 2020 next week. But I wanted to take this time to say thank you to Andrew, Bridget and Manish. It's been such an interesting conversation. I feel like I come away learning quite a lot. So I will be chasing a lot of these subjects in the future with you guys as well for interviews, for articles. I'm just going to come off camera while my colleague just comes in due to our technical issues earlier, which I do apologize about. But thank you so much. And I will pass over to my colleague, Jack, now.
Thank you very much for that, Jimmy, and thank you very much to our panel of speakers. Thank you again to all those who attended. Apologies for the audio issues at the start. As I mentioned, the session will be recorded and a video will be, an edited video, I'd like to add, will be sent out to all attendees in the coming days. Before I sign off, I would just like to tell you how to get more information on Vixio and where you can meet the teams. For those that are based in North America, Vixio will be exhibiting at the Money 2020 USA event between October 23rd and the 26th. So be sure to visit the Vixio stand, which is 6455, to meet the team and to learn more about our powerful payments compliance product. If you have any questions about anything discussed in today's webinar or would like further information, please email info@vixio.com or visit vixio.com for more information. Thank you again. I look forward to speaking to you all at the next webinar. Thank you.
Thank you.
Thanks so much.
Bye.
Bye.